Hi, good evening all. Good evening. So welcome to today's webinar. So today we are talking about US CFD lah. But I see there is still quite numbers of people haven't joining yet. So maybe we wait for another 3 minutes, then we kickstart for our today sessions. So we'll start by 8:03, okay, 8:03 p.m. All right. So I think we'll be starting in 1 minute more, okay? All right, so I see quite numbers of attendees join for the sessions already. So first of all, welcome all and thanks for having your time here together with us on our today webinar sessions. So I am speaker for today, Zhenzong. So hopefully what I'm sharing today is helpful for you to analyze the markets, and hopefully you can learn something here lah. Okay. All right. So can you all see my slides? I think it's all good. So before I really kickstart today's sessions, let me have a quick disclaimer here. Okay, so today's presentation has not been reviewed by security commissions and is provided for the general information only. So it does not constitute any buying and selling recommendations. So if you're looking for any more detailed buying or selling trading ideas, maybe you can look for our service privately, or you can look for your own respective remiser or dealer. All right. So before that, let me have a quick introduction of our company first. Okay, Phillip Capital is a company incorporated since 7th of October 1995. So in Malaysia, we not only is one of the trading participants of Bursa Malaysia Derivative Berhad, participating organizations of Bursa Malaysia Securities Berhad, but also a holder of capital service license. And as you can see here, here's the nationwide map of our office in Malaysia. So in Malaysia, our headquarters is located in Kuala Lumpur, and across East and West Malaysia, we have total 11 Phillip Investor Center. So if you have any questions or if you're interested to explore more of our service after today's sessions, you can drop by your nearest branches to inquiry about our sessions and service. Okay, so here is our global network. So we actually is a Singapore company, but we're also servicing an international client base. So apart from Singapore and Malaysia, we also have our client base in France, Turkey, Dubai, China, Japan, and some others foreign countries. And here is for our global coverage, means the market or the exchange market that you can trade with Phillip Capital. Okay, so the most famous one, we have our own Malaysia, BMD and KLSE is for futures and stock tradings. And beside that, we have our foreign market in Singapore, Japan, Australia, Hong Kong, UK, US, and Germany. So actually with us, you actually can explore most of the comprehensive product in the worldwide markets. Okay, so here is our broccoli. So let me have a quick intro on this. So we are number one top choice broker and champion in best retail derivative trading participant 2024, and second runner up as best overall derivative trading participants. Okay, so this is for the future sites. And here is why we can become your one-stop solutions for your trading. Among our product and service we provide, we not only provide brokeraging trading in futures, but also in stocks and CFD. So in futures, you actually can explore index futures, agricultural futures, meta, energy, and interest rate futures. And stock, not only local Malaysia stocks, you also can explore foreign stock like US, Hong Kong, Singapore, and Australia. So contract for difference, CFD is for those equities traders, equity investors, stock investor that you're actually looking for higher leverage in stock market. So you can go for CFD. It's a quite suitable product for you. Sorry, there is a slide here. Okay, so the next one, why we can become your broker of choice. So as I mentioned just now, we are an award-winning multi-asset broker, and we actually have 24 hours booking and execution support. So meaning that if you're trading foreign market, no need to be worried that we have no execution support for you in the meantime. So our dealing is ready 24 hours to execute and stand by for you. So beside that, we also have latest market news for our client from time to time, like we having seminar, webinars, and we actually able for you to access wide array of product. And the most important is our in-house platform, Phillip Nova, is no any platform fees. Okay, so if you are a beginner or you actually just a newbie that you want just about to explore your investment journey, but you have no idea how to start it, we also available free one-to-one coaching sessions for you. So among these sessions, you can explore and make an appointment with us regarding maybe introduction to futures, to CFD, or you want to know that a certain product like commodities, like index product, and also the platform coaching on how use our platform to execute a trade, and maybe to know more on our charting system. So it's about a technical analysis. If you want to know more about technical analysis, how to study the candlestick chart pattern, you also are welcome to make an appointment with us to explore more before you really kickstart your investment journey. Okay, so here we also available weekly market call. On every Monday 11 a.m. we have our analysts will present on weekly views and updates, as well as talk about newly published report. Okay, it's online, so later I will post a QR code here. If you're interested, you can scan the code and register yourself. And on the same day, every Monday 8 p.m. we have our technical analysts to discover weekly trends and potential entries and exit level through technical analysis. So if you're interested, you can also register yourself for it. All right, so sorry, I think I didn't share my screen. One moment. Okay, so let's continue. So here's the QR code for you to scan, or maybe you can interested. If you're interested, maybe you can take a picture or scan the QR code to check for our series of upcoming events. So we usually will do few of the webinar and physical seminar for every month regarding our commodity or for stock market, for index futures. So you're interested, you can register for yourself. It's free of charge. Okay, so and if you're not our client yet and wish to explore more our platform, our service, so you're welcome to open an account with us. So you don't need to be worried that you need to come physically over to our branch. So because now we available online account opening already. So if you're interested, you can scan the code. So directing you to our account opening applications. So you can fill out your details here, and our dealer will contact you after you receive your applications. All right, so here have a quick check on our recent promotions. So currently for the promotion we're going is US CFD promotion. Actually, it's a zero commissions for this US share CFD trading. So in this campaign, you are not only able to enjoy $0 of commission, but also free real-time US market data, no platform fees, and integrated with TradingView charting tools, and we are trusted broker with capital market service license. So if you're interested to know more how to trade, or how to eligible for this promotion campaign, how to start your US CFD trading with us, yeah, you can scan the QR code on the screen for more information. Okay, so before I really kickstart today's sessions, let me have a quick introduction of myself. So I'm Zhenzong, a futures and stock trading dealer at Phillip Capital, holding a bachelor degree in finance and investment. So I actually usually will expertise in analyzing market trends, economic conditions, and I'm also a national CFA Institute local research champion. So usually we're combining the market analysis and technical skill to empower clients with effective trading strategy. So before I really kickstart today's sessions, if you have any question, you are welcome to post your question in the question box there. So after the sessions, we have a short Q&A, so I'll be answering your questions later. All right, so for the most general information, what is contract for difference? Okay, actually you might be hearing that I trading in CFD stocks, I trading in CFD Forex, but actually do you know what the actually means of the CFD? So actually it's an agreement made in financial derivative trading where the difference in settlement between open and closing trade prices are cash settled. So maybe this the explanation is too official, but let me illustrate you how the things works. Okay, actually there's an agreement between traders, which is you, and broker Phillip Capital. So the trader expect the price of the asset to rise and make the trade with the broker. Okay, actually it's a trading agreement between trader and broker. So if you're buying certain CFD contract, so broker will be selling you that contract. So the trade will be made without a physical delivery of the underlying asset in favor of trades. So the trade will be closed at the request of the traders who receive following depending on the price changes. So the concept of the profit and loss is quite similar with the stock trading or the futures trading. You make the profit if you buy low, sell high, or you make a losses if you buy high, sell low. But later I will explain how the things is different from the usual stock trading and stock investment. Okay, why CFD trading? Okay, I believe most of you must be involved yourself in futures trading or in stock investment, but never been yet in CFD. So why CFD also can be one of the tool to explore or bigger our leverage, bigger our exposure in stock market. The first one, no any exchanges fees and stamp duty. So in terms of the transaction cost, actually it can save a lot if you're doing a multiple trade in CFD compared to the stock trading. And portfolio diversifications. I believe that a mature investor or a mature trader does not all in their money or put off their money in one basket. So to make your portfolio more sustainable, to make your portfolio able to generate a moderate return over a long time period, diversifications like investing in stock, in index futures, in CFD is a must for you. For you, it's a must for you to allocate your capital wisely for your portfolio diversifications. And the another features of CFD trading is about leverage. So leverage actually is bigger your exposure in the market. In the same time, you can earning a bigger potential return, but also in turn will bigger your risk exposure in the market. So that's why they say CFD or futures, they might be a very risky and very can get you very quick profits investment product. Okay, the next two is the no expiry date. Okay, so the thing is just like similar with the just opposite with the futures trading, or just opposite with the stock warrant. So if you're trading CFD, there's no any expiry dates. So meaning that you can holding for perpetual if you still believe the price will going out following with your expectations. Okay, so the another one is a bi-directional trading. So in stock investment, you only can buy in a one direction. When the market is bullish, you actually can make money. But when market is turned bearish, what can you do in the market is only sell off your positions and avoid yourself from making losses. So, but in CFD, you actually also can profiting from the market dropping, meaning that you entering a sell positions and makes profit when the market eventually follow with your expectations. Okay, so the another one is a hedging. So it's about the hedging defect for a portfolio, making your portfolio more sustainable over during the market downturns and the ups and downs in markets. So for example, how to leverage in CFD. So example, if today you are looking to trade certain stock, let's take US stock as example, maybe Tesla. So you are very confident that the Tesla price will raise in coming quarters, but you see that your capital that you want to trade in the market is actually can just enough to buy a little shares of the Tesla company counters. So what can you do? Actually, you can look for CFD product because we're offering 10%, as lower as 10% of the margin requirement to trade a stocks CFD. So meaning that if you, for example, if you're only involving in the stock market and you're having a 1,000 US dollar, you only can commit yourself to buy 1,000 worth of the 1,000 USD worth of the shares in the market. But in US CFD, you actually can maximize it up to 10 times bigger, which is you can utilize your 1,000 capital to trade up to 10,000 US dollar of the CFD contract of the amount. So as leverage increase your trading volume, profit and losses also are magnified. So always be aware that the thing is risky. It can be bigger your risk and return at the same time. So just be careful if you are doing any leverage trading in any investment products. All right, so here have a quick look on our US single share CFD product list. So we just recently add our US share CFD in our Phillip Nova platform, which is our in-house platform. So and among the list of the US shares CFD product, we can say we actually included the most traded and the most famous counter. So you can actually access many. I can also say quite most of the counter that you can access through our product list that we provided in our Phillip Nova trading. Okay, so we apart from the US single stock share CFD, we also offer index CFD. So among here we have S&P 500, Nasdaq, and Dow Jones. So these three major US index are also available in our index CFD product list. Okay, so after a quick introductions and the definition of CFD, so I believe the most exciting part of today is you all might want to know what's the potential next movement of the US market. So I will brief a quick look on this. So before that, let me look into the previous historical data of each worldwide market. Okay, it's a global return snapshot. Market have rebounded with spread compressions, shrugging off volatility and geopolitical headwinds. So as you can see here, market actually rebound quite quickly. As you can see now, almost worldwide market is going bullish, like Nikkei, Hong Kong, China, US, all of them are doing quite good. But just our local market is quite slow in catching out the momentum. So yeah. And the next one, length and the severity of bear and subsequent bull market. So when we see, people might say, oh, the market is going so high already. Is that the right timing for me to still enter the market yet? So here I have a quick look. And actually you can see the line graph here represent of each color representing the bear market of there. So you can see, okay, the line chart below there is representing for bear market, and the upward there is representing the bull market. So even there's a financial crisis like tech bubbles, like Black Monday, global financial crisis happened in 2007, or pandemic, COVID-19 pandemic. There's a very serious bear market happen in market. So many people get lost in that bear market. But as you can see, when after the bear markets, what's the subsequent bull market actually is more long lasting than the bear markets. So we look into the average amount after the bear markets is about 14 months for the most serious most serious financial crisis in our history. But actually the market will welcome another wave of the longer bull market periods, about the average of 70 months. So actually in investing in US market, don't be so pessimistic. So because in usual case, bull market will be longer lasting ever more than the bear markets. So here is a quick look on S&P 500 after falling 2.5% today, after hitting an all-time high. So the chart is looking at the historical class of S&P 500 drop more than 2.5% in the day. So as we can see, these events are quite rare. So they only happen in a handful of times since 1950. So you can see the table shows how the market performed after each event. Okay, although the short-term performance, like 1 week or 1 month later, tend to be mixed, but in terms of the medium to long-term trend, is generally positive. And on average, the S&P 500 gains about 6% after 6 months, of over 20% after 1 year after the bear markets. So historically, the market will positive 88% of the time a year later, following a crash drop. So if there is a crash drop, sharp drop in the market, so just be maybe you can be more optimistic and start investing your money maybe with a dollar cost averaging in the US market. So while sharp pullback can look worrying, history suggests that this did few occur within a longer trend uptrend are followed with the continual gains. Okay. So here is a Q2 earnings trends for US companies surprised on the upside. So actually this is the data across for all the sectors in US stock lah. So it's representing their EPS, their earning per share grow by sector. So as you can see, actually most sectors are still recording a positive margin, sales and growth rate, but only very few of the sectors recording a negative amount, which is utility, materials and energy. So if you're looking to have a long-term investment in a particular sector or particular stock, maybe a few of the sectors that actually recorded most gains in the respective can worth a look lah. All right, so here's the chart showing the earning trends for US companies surprised on upsides. So the chart showing the percentage of S&P 500 companies that beats earning expectation in Q2 2025. We can see that almost 81% of the company exceeded EPS estimated, so which is also well above the long-term average of around 72%. So at the same time, there's about 79% of the beat revenue forecast also stronger than usual. So this what actually the graph can telling us is this actually indicate the corporate performance have been resilient even amid a slowing economy and higher interest rate across a longer period of time. So overall, the result suggests the earning momentum remains healthy and the companies are managing cost and margin effectively. Okay. So here's the consensus EPS growth by region. Okay, actually it's an overall EPS growth from a listed company for of all the different country markets lah. Okay, so I think this is quite more important. Okay, so this is economic dependent of tariff effect. So since Donald Trump being elected as US president, I believe the tariff news actually affecting market very volatile. Okay, market can be going down and going pumping high in very short of time. So actually you can see the US quarterly real GDP growth rates, okay, quarterly on quarterly growth rate lah. So actually the dark blue one is the historical data which already happens. So you can see the growth rate actually is quite high. Okay, they recording a quite stable and moderate growth rate quarterly on quarterly, except the first quarter of 2025, which is the time the tariff first happening. So, and the light blue bars denotes forecast number for QOQ seasonally adjusted annual rate. So, analysts expected that in coming quarters, maybe the third quarter, the fourth quarter, and the first quarter in 2026, the GDP is still growing for US quarterly GDP, but in a slower pace. So actually the tariff actually will slow down the international trade and the growth of the company lah. So actually it's all in expected. So if you see that market is still going very high, maybe this can be as one of the reference lah to further analyze the markets. Okay, so here is a September FOMC meeting risk management cards. So all right, so you can see there's a downtrend. Actually it's a comparison between individual FOMC member projections versus median FOMC projections. So all right, so actually federal latest decisions were categorized as a risk management card as acknowledgement of the labor market risk, but also elevated uncertainty. So you can see here the next charts. Market expect deeper rate cuts than Fed. Okay, so the dot lines represent the FOMC median dot plots, and the dark blue actual line is the rate implied by federal fund futures. Okay, actually federal fund futures represent the forecasting from the both retailer and institutional if they trading federal fund futures rate. So if they forecasting or expecting there's a lower rates in coming quarters, for sure they'll be trading in the lower futures rate. Okay, so actually from those you can see in the when we compare two of these, actually the market expectation is actually far lower than the further FOMC median dot plots forecast. So okay, so this also telling us that that might be a two more basis point of the rate cuts in the coming quarters. Okay, so here is a quick news on this of our Federal Reserve Chairman Powell say that the QT will end in the coming months. So actually it's as a super bullish for the market lah. Also actually it's a news that happening last week. So if we foresee that a USD is going to depreciate because of a lower interest rates, what the effects to the market? So actually if USD is offering a less interest rates, meaning that the dollar is offering a less attractive interest rate to the people and investor. So what if you're an investor, what you will think about? You might be withdraw your USD and look for other alternatives such as Asian equities. So we can say that a weaker dollar could encourage foreign capital investment, enhancing the valuations of Asian market. There's a smart money flows lah, the flowing of the smart money. If they foresee that the USD is going offer a lesser capital, offer a lesser interest rate, for sure they'll be looking in Asian equities to convert their money into Asian dollar and invest in Asian markets. So if USD is going to depreciate, I don't think it's a good sign lah for US market. And here is the Q3 earnings season preview for the first 2 weeks. Okay, so you can see actually this is the month of the October is the quarterly result releasing peak month lah. So it's a really QR releasing month. So here maybe you can have a snapshot on the most famous company in US on this. So actually, what will affecting the market most actually is the 7 magnifications lah. So in case you can see the Meta or other technology company is going to announce their earnings seasons in next week. So just be more careful if you're trading or holding any short-term US investment products. Okay, so after study on US macroeconomic and interest rates, I believe that another concern of an investor is, can AI trend sustain and which counter worth a look? Okay, we know that currently the worldwide market is pushing by AI stocks. You can see the Nvidia, the Oracles, everything. The company stock that are related to the AI actually can boost the market very easily and making S&P 500, Dow Jones, and Nasdaq going higher and higher, even gold also going higher. So actually, there's a theory telling us that there's no way that for gold and US stock market they going in the same directions in a way. So actually, there's a divergence between these two products because there's a negative correlation between US stock market and gold. So why gold market and US stock market can be going high in the same directions? Because actually now the US market is mainly supported by the 7 magnifications, and almost all of them are related to the AI. So here's a predictions of AI market size in stock markets. So you can see actually analysts, they already forecast that AI, they were growing in a very high compounding growth rate. So in terms of the solutions, in terms of the service of the AI company they offered, actually it could be a very large market size that to be achieved in 10-year times. So if you're looking for any company to invest in, maybe you can look into the company that offering AI solutions instead of the AI service lah. So if there is a bigger market size, for sure those big company, those smart company, they might willing to invest in their company to capture the market size, to capture a higher revenue. All right, so here's the overall AI markets, okay, size by in coming 10 years times. So you can see actually in 2023, when the Nvidia is start exploding, it start booming in the markets, the analysts already expected that the AI market might be compounding, might be grow in the compounding growth rate. And actually in 2025, the market size might be achieved 390 billion US dollar, and for coming years that's only higher and higher. Okay, so and achieve another almost 10 times higher lah in 8 years more time. So as I mentioned just now, currently the US Wall Street market is actually mainly supported by the Magnificent Seven. So Magnificent Seven stock represent the combined market capitalizations of the top 7 technology stock in US lah, which is Microsoft, Apple, Alphabet, Amazon, Nvidia, and Meta Platforms, and Tesla. So as you can see, if we only look particular into the Magnificent Seven stocks, actually they recording a very huge growth rate, which is at about 30% as due of October. But the rest of the S&P only record or the 11%, although it's still a double digit, but it's actually is far more lower than what actually Magnificent Seven stocks they contribute to the market. So we can say that there's a high reliance and high weightage in the market from AI companies. So what we expect and what we need to monitor, if you still interested in invest in the AI company stocks, so the most concern is whether the AI company, the technology company, their coming quarters able to catch up with the analysts forecast earnings or not. So we can see AI stock, their share price is surged very high if there's when it comes to the quarterly earning release. But imagine if there's a one quarter that showing a signal of the slowdown of the earnings, that might be a panic to the markets, because from the chart we can see that there's a high reliance to the AI stocks for the US stock markets. All right, so here we have a quick look for why the AI market can be so huge, and why we expect that the AI market can be a huge biscuit or huge cake for all the markets. This is because AI is not only for a particular technology or industry. So if you look back in 2020, or even earlier, there's a booming of every single particular sector. Maybe we say, oh, there's a construction booms, maybe there is a technology booms, but actually AI they empower any of the sector. So if you're doing educations, if you're doing gaming, healthcare, drones, entertainment, or finance, every sector they needs AI. So you can see actually from financial sector, like from banks to broker or other education service provider, or maybe we take Tesla example, their RFD, which is their robotaxi, or using power of AI. So here's leave it a very huge space for our imaginations how AI market can be growing until a very large scale. Okay, so AI compute predictions, where will be the next 10 million GPUs will be deployed. Okay, one moment. So you can see there's a purple color bar representing the market size for the data center capex, which is capital expenditures, and versus to the NVIDIA data center revenue. Okay, so as you can see, data center capital expenditure is still very huge according to the Del Oro projections. But when we look further into a data center revenue, it also actually reflecting. From the slide, we can see they expect the data center capital expenditure might be growing in the coming years. And the white color bars represent the NVIDIA data center revenue. Okay, so you can see here, actually, after the first quarter of the 2024, actually the data center, the contributions of the data center to the overall NVIDIA company revenue is actually growing at a crazy growth rate. So you can see the gaming one, the light green color, you can see there's also a gradually growth rate in gaming sector, which contribute a more revenue to overall result. But data center actually is growing at a very crazy speed. So and overtake the gaming sector already. Okay, so you can see when the last time the gaming revenue contribution beats data center sector contribution is during the fourth quarter of 2022. So after that, the data center is overtaking the gaming revenue at very high speed and a crazy speed already. So in first quarter of 2026, market might analyze and expect that actually the gaming revenue will record a highest revenue amount in the first quarter of 2026, but data center revenue will also compounding at a very huge rate. So here I have a clear picture for you how the data center revenue, how big is the data center market size that can NVIDIA and those AI company that can be invest and to capture the market size. So okay, so I believe last week most of you already saw that the news actually is a CEO of NVIDIA says that China market shares might already fell from 95% to zero after US sanctions. So if you look, if you study further into this industry, you can know that actually China market is the second largest market, AI market, just behind the US. So why Nvidia they will choose to reduce their market share in China after US sanctions? I believe all of us know that that's because of the US sanctions of the Donald Trump policy lah. All right. So over the past few years, Nvidia revenue already gradually shifted, reflecting the change of the business focus lah. So previously, Nvidia main source of the income come from the gaming and driven by the strong demand of the GPUs and PC consoles. However, in recent years, starting from last year, the data center segment already recording explosive growth, fueled by the surging demand for AI computing, cloud service, high performance chip used in a large language model and enterprise AI infrastructures. So today, the data center business already clearly overtake gaming as a Nvidia, the most primary revenue driver, contribute to the major of the revenue contributor. So, and recently the CEO of the Nvidia, Jensen Huang, already said that the market share in China already fell. So from the broader perspective, this marks a funding point for both Nvidia and the global semiconductor industry lah. Because for Nvidia, it meaning that it losing access to what the second largest market in the world, and which is also the fastest growing markets. So, but despite that, the company continued to post a record-breaking global revenue, showing that how strong AI demand towards the data center in US and Europe that can actually help the overall market revenue. So, however, the exit from the China also leave a door open for the other local competitors lah. So we know that there's still a demand for the data center and the gaming chips in the market. So if we know that the Nvidia already reduced their market share, so what company that we can see for the next that still haven't reflecting in the share price is those company they offered the similar product that what actually Nvidia offering. Okay, so maybe we can have a research on this and see that which company they able to come in and take over the Nvidia market shares, which already feel from so high, almost 100% to zero lah in China markets. Okay, so here is a quick look. Okay, so after losing the China markets, so you can see even though the revenue and net income of Nvidia still growing every quarter, but actually the revenue growth rate is actually reducing lah. So there's a significant effect of China market that affecting the overall revenue and net income for Nvidia. All right, so if you really want to know that what's the next movement of the US market and whether Nvidia as the most hottest stock for the current, the most viral stock at this point of time is still worth investing or not. Okay, so the next QR is the main concern lah. Whether the market, the earnings is still able to catch up with the market expectations after losing China market. But if yes, I believe there's still a very huge space to growth lah. But if no, I think that might be a turning point for Nvidia quarterly result earnings. All right. So here we can see there's a technical analysis for Dow Jones. So it's actually a daily candles lah. So I think nothing much to explain of the current trend. If you are monitoring the trend, the day-to-day trending of the US index, you must know that although there is a main sharp drop in April due to tariff, but the market is still going very bullish, going very crazy. So and currently it's about stand at a historical all-time high lah. So I think it's not easy and not so quick lah for Dow Jones and those other major index to retrace back and for you to find an entry point. But if there's any retracement, I believe you can, according to the Fibonacci retracement as the main indicator to determine your entry point for the index level. Okay, so if you have not investing in US any index yet, I suggest that we maybe can wait the market to clearly break above new high, or to wait for the market to retracing to the Fibonacci level. Okay, but if not, I think it's still very risky lah, especially in month of October. There's many of the listed company were going to release their quarterly result, and I believe we are causing a certain volatility to the markets. Okay, so the same things goes to the Nasdaq and S&P 500. So market actually is also recording at a historical all-time high level. So yeah, I think nothing much explained on this, but as long as in short term wise, as long as the market index is well support above EMA 9 and EMA 25, the momentum is there lah for a short term view. But for a longer term, I think it's more to a fundamental and how those listed companies post their quarterly earning result. And what we can do is monitor the next movement. And is there any retracement to a certain suitable point? I think that's worth a wait lah, instead to rushing in to the market, especially at this quite high level already. All right, so after studying so much market macroeconomic views, company forecast earning analyzing, so if you are interested in involving your US trade, maybe you feel that US stock is quite costly for you to get into, maybe you can just looking for a bigger leverage or bigger exposure, maybe you can consider for a CFD also lah, contract for difference. So here have a quick look on the minimum initial margin that we offering for the respective country stock shares CFD. So for Malaysia, we have a minimum 10% of index shares, which is actually is a 10 times leverage lah, and minimum 20% of non-index shares. So if the share is not listed under top 30 of the KLSA index, so that we only can offer up to 5 times leverage. And okay, so if you're trading CFD, there's a charges, so for you to keep aware. So there's a commission to charge on each CFD trade. So calculated as the percentage of full contract value as the underlying stock that's bought or sold. Okay, so if you can see, the commission rate that we're offering for our Phillip Capital offering for Bursa share CFD is 0.5%, and the minimum commission is 60, whichever is higher lah. So for US shares, we're also doing a commission rate at 0.5%, and there's no any minimum commission. So all will be go by the percentage commission rate. But now since we're having a promotions for US CFD, so if you are interested to trade CFD, actually we can enjoy a zero commission rate for US share CFD, US ETF CFD, and World Index CFD. So meaning that there's no any commission amount for this trading. All right, so financial charges rate. Okay, so financial charges rate, apart from commission, which also one of the transaction costs will be involved if you're trading CFD, there's also another charges called financial charges. So if you are looking to trade, so financial charges only apply if you're considering to hold for overnight trading in CFD. Okay, so if you are doing intraday in and out of your CFD trading, there's no any financial charges, but only commission, but it's free now until 30th of November. So we already waived the commission rate to zero. So what the only cost that we're facing is the financial charges lah. Okay, so we have a quick look. So it's a 10% of the share value per annum. Okay, so how we'll be calculating the commission and the financial charges calculations. So here's have a quick illustration, sir. Example, if you buy 10 units of Tesla shares CFD at USD 400, so quantity is 10 units lah. So initial capital 20% of the margin, which is you only need to contribute or use your capital of 800 of US dollar, and you're able to capture a full contract value of 4,000 USD. So commission rate 0.5% is about 200 USD already, and financial charges per day is 10% per annum. So if you averaging to the each single day is 1.1 US dollar lah. But for now, to enjoy our zero commission rate in trading US CFD until the end of the November, so you actually can waive the commission rate to zero already. So actually can save you a lot. And there's a financial charges per day only lah. So if you are carrying a 4,000 of a contract value of the Tesla shares, the only cost that you involving or been charging is only 1.1 USD per day only. All right. So in case you want to explore how to use our platform to trade CFD, okay. So as I mentioned just now, currently we already available our US CFD trading in our Phillip Nova. So I believe if you are already our futures client, you might be using this Phillip Nova platform to trade futures. But also we also adding another CFD product into it. So for the first step, if you want to explore CFD trading in Phillip Nova, you need to contact your remiser and dealer to open an account as our CFD client. Okay, there's some requirement to become a CFD client, and you need to fill in your applications. So after that, we will enable the CFD product in your Phillip Nova app. So after that, you actually can access not only futures but also CFD product in the our trading platform already lah. Okay, so if you already have the access to the CFD trading, so here you can find the US CFD contract. So we have stocks for the index and ETF. So if you want to know more details about the US CFD stocks, the US ETF, they are the contract specifications, they are what the cost, financial charges, what the value per tick, what the initial margin, all these info can be found in our trading platforms. Okay, so if you're interested, don't hesitate to contact your own remiser, your own dealer, or just inquiry to our official website or email. So we will be guiding you if you're interested to explore more on this US CFD contract of difference trading. All right, so here's come to the end of my sharing sessions, and I already shared about the US economy and CFD introduction, CFD trading, and AI sector. So because it's only a 1 hour session, and still many much I want to share, but I can't make it today. But no worries. So if you have any question, you can drop me a chat box. So I will be reviewing one by one later. So hopefully what I'm sharing today is helpful for you, and you can learn something today. Okay, actually I can see a lot of questions here, but let me have a drink first. Okay, I saw a question from Stephen Fu. Where can I get the recording? So actually the recording will be posted in our YouTube channel on the next day. So if you are interested, you can just YouTube search the webinar title in YouTube tomorrow, maybe after tomorrow lah. So after we posting that, actually you can access to this recording already. If you have any question, you can just feel free to drop in the question box. Okay, not the chat box, it's a question box. So given, okay, I saw a question from Jess Wong. Given the current US-China trade tensions and weaker dollar, what are the most probable scenario for the US equity bull market in terms of duration, driver, and risk? So as I explained just now, currently the bullish of the US stock market is mainly backed by the AI company growth. Okay, actually, if you take out the growth rate of the US AI company, actually the growth rate shouldn't be as much as the current one lah. So as you can see, people also investing their money in dollar. So actually, market is going quite crazy. So what's the probably durations? I think I can't give you an exact timeline, but maybe the turning point that we can monitor and we can keep a look is the first one, interest rate cuts, and the another one is the AI company, their quarterly earning release lah. So if their earning couldn't catch up with the analyst earning figure, I believe will causing some panic to the market, and actually will causing some panic selling lah. Okay, so that might be a turning point for us to monitor. So if we estimate that there's a weaker in the US dollar weakening, so what we can keep a look or invest our money in actually is Asian market lah. So this is also one of the of my own watch list. So especially currently, you can see Hong Kong market already going to the very quite high level already, but China market is still haven't catching up. So I believe there is a opportunity lah for the markets. All right. And the next one, what sector are most exposed and how big is the risk to earning and valuations? How should investor repositions? Okay, so how should investor reposition? Meaning that you're asking for the capital allocations for your portfolio diversifications lah. So what sector are most exposed? For sure, is the technology sector, because it's mainly driven by the Magnificent Seven stocks lah. So how big is the risk? So if you still about to enter the technology, I believe it's not a very good timing for the long-term investing. Even though we know that market could be going higher than the current one, but the most important thing is our entry cost. So entry cost will decide your gains of your investment lah. So if your invest at this current level and other investor already invested earlier, I believe it will be resulted in very huge difference lah. So yeah, how investor repositions, what we're looking for is the turning point lah. So if there's any retracement for the markets, if there's a retracement in the market, so and the AI market still able to catch up, so I believe the market is still able to continue. Okay, another question from Jess Wong. Given China's dominant position in global rare earth supply chain and recent export control, how does this leverage affect US equities? Okay, so I believe the last 2 Fridays ago, actually the China, after dropping this real earth export control, and Donald Trump want to revenge, want to fight back, and they say want to add another 100% tariff on China export, and causing market to drop lah. The Bitcoin, the market also dropped a lot on the day. So because if you look into further how actually what the usage of this global rare earth actually is used for the military weapons manufacturing, meaning that US government, they import the global rare earth from China to use in the military weapons manufacturing. And you can see actually military weapons manufacturing, they contribute a very much revenue for US government every year. They're selling weapons for the war, for the war global. So if there's a control from the China exporting their rare earth, I believe quite affect US market lah and the sentiment. So I believe that the Donald Trump and those US investors also know the importance of this global rare earth from the China. So I believe that that's maybe the tariff threatens lah that happening usually for past few months will not often will unlikely to happen again lah. The tariff threatened from the Donald Trump, because the global rare earth from China is quite important to the US. Okay, which sector or asset class are likely to outperform or underperform if the bull market persists and a weaker dollar and ongoing trade conflict, and how should one position accordingly? Asset class wise, if you if you're asking for the particular sector, I think will mainly in US market will be mainly affected by the weakening of the dollar. But if you're asking, is there any alternative? So if you want to move away your capital, your investment from US market, is there any markets that we worth to keep a look? I think yes. The first one is the Asia market lah, especially China and Nikkei. So actually Nikkei, the index is not bubble of AI. So actually, it's a reflecting of the economics. So I believe there's more solid uptrend movement compared to the current US situations lah. So if there's a weakening dollar, I believe the smart money flow will go into the Asian markets, and the China one also not yet to catch up with the Japan and India momentum because of their economic, their own economic. So if the economic is turning good, I believe it's a turning point for the markets lah. All right. Is there any more questions? Okay, maybe I just pick the last questions for today. What are the signs of the whole overheating, and what distinguishes the current AI cycle from the dot-com era? How should investor positions themselves accordingly? Okay, so actually for dot-com era representing a technology boom for overall the stock market. So why the dot-com bubble will happen? Because actually the market is reflecting quite very quick, very too quick, and they realize that the popularizations of the dot-com technology is still not that quick for all the sector to adapt and to accept the technologizations of the era lah. So what to determine is there any overheating of the current AI cycle? So as I can say, the difference between AI and technology is only applicable for a particular technology sector itself, but AI is able to empower all the sector, meaning that there's a very large cake or large biscuit, large market size for all the AI company to capture. So if those you can see the manufacturing 7 are the most smart, are the company that managed by the most smartest manager in the world. So if they're investing their money, invest their billion or trillions of the dollar in AI capital expenditure, I believe that they also foresee there's a very large, still a very large market size to capture lah. So if the share price, the ongoing bullish share price, able to back by a growing company quarterly earning result, I believe that will not be a bubble. But yeah, but we might need to see lah whether the share price reflecting too quick or not. So the turning point is the quarterly result and the how the company can still sustain, how the investor confidence level can still sustain even there's a weakening of the US dollar. All right, so I think that's all for today. So hopefully I answering well of your questions for all the questions just now lah. So for one last message, if you're interested to explore our service, just feel free to drop in your inquiries online or walk in our branch. So our dealer, our marketing team, our finance team will assisting you with your inquiries lah. And if you're looking for a recording for today's sessions, you can just search the webinar titles on our Phillip Capital Sendirian Berhad YouTube channel after tomorrow. Okay, after tomorrow. Okay, so thanks you all, and goodbye, and having your good night today.